pulsar and sell his pulsar.
I had to start the show like that, guys. There's so much to talk about. You better buckle up, grab your favorite beverages, grab something, grab some snacks, put your questions in the chat because we have some crazy, awesome guests today. Let's let some people trickle in, and we're going to get this party started. Let's get to it. Welcome back, guys. We have a lot to talk about, and I have an update from Neil Wolishin of Cavitation Technologies, and I'm going to play that for you. I know some of you guys have been asking me, and you guys wanted an update, and I have that for you. But before we go any further, if you follow the show, you know we spend a lot of time covering the OTC, and one of the biggest frustrations is simply finding a broker that gives you access to the stocks you actually want to trade. That's one reason I use Speed Trader. I recently used my own Speed Trader account to purchase expert market shares that I couldn't buy through traditional brokerages. And here's something else I love. Their customer service. When you call, an actual person answers the phone and helps you. If you're an active OTC trader looking for more access and great service, give Speed Trader a look. You'll find my link in the description below. Make sure you guys give them a try. Awesome stuff. So let's get into this update from Neil Wolishin of ticker CVAT Cavitation Technologies. This one, it's juicy.
Hello, everyone. I'm Neil Wolishin, CEO of Cavitation Technologies, Inc., and the crowd of BFC, Eric Urak, OTC traders, and anyone who follows CVAT. Yesterday, we did announce that we finally signed an agreement with EGS, our definitive purchase agreement. And I want to elaborate a little bit on a few items that will be coming along fairly soon. And again, how we're going to structure the deal, what are some of the important elements. And again, more information will be coming along. It will be posted online and through various channels that will be available to all the investors. So fast forward. A definitive purchase agreement was signed between Cavitation Technologies and CVAT and EGS. And, it is... the value of that agreement is $35 million, which will translate to approximately, I'd say, between 10 to 10.5 cents per share. I do not have the final calculation, but it should be within that range. It will, like I said, it's probably closer to 10.5. Another $7 million was allocated toward Alchemy Beverages, and Alchemy Beverages is a private company. The reason it took a bit longer than we had anticipated for the following reason, that Cavitation is a public company. We're an OTCQB full reporting. Alchemy, although we do have full audits, we run the company almost like a public company. Again, the audits, financial statements been audited. All the shares been digitized and running through a transfer agent. But all in all, the aggregate value of the deal is $42 million. Why for CVAT shareholders Alchemy is important? Because the minimum value for Alchemy is $7 million. But anything above that will also be transformed or moved forward towards CVAT shareholders. So if valuation comes out higher than $7 million, and it's predicated on the fact that this is the type of agreement that we have with EGS, that Alchemy needs to or has to get the fairness opinion. If the number is higher than $7 million, then the value for CVAT shareholders will have to be bumped up. So it took us a while also to come to an agreement of where the numbers are going to be. And basically that's where we are. On Wednesday morning, anticipate that, we're going to be filing an 8K because we do need to, from the regulatory perspective, we need to file an 8K depicting the agreement between EGS and CVAT. Next thing would be, I'm anticipating that signage of Alchemy agreement will be done fairly soon. I think the final version of agreements has been already circulated. And then I'm looking forward to our tender offer. Tender offer will be filed. I do not control it because, again, it's really EGS who are filing it first. But I anticipate within the next, 3 to 5 days it has to be filed from a regulatory perspective again. So that would be the roadmap that we're taking right now. Once tender offer is filed by EGS, the board of cavitation and Alchemy, I think, has 10 days to reply back, whether we approve, disapprove, or neutral. And that's, CVAT board, that's a prerequisite that we, have to take care of. And again, it's a transfer agent, how the shares to be tendered, procedural matters. All of that, again, I want to emphasize, will be circulated because I received a number of texts, emails. People are asking these questions, and instead of going to each and every one of you, just be a little bit more patient. We will get it out to you guys in the format that's going to be fairly comprehensive, and you'll have an understanding how all of that's going to work itself out. So anyway, everyone have a great day. We need a few more days to get things rolling, and I look forward to speaking with you guys soon.
Excellent update there. Here to talk about that and more. My co-host for today, Kiko Stocks. Let's bring him in. Kiko, welcome back. How you doing today?
Good. How are you doing?
Good. What do you think about that update? I love it.
Sounds good to me.
Yeah.
Make it out. I like the priced PT, they call it, price targets.
Yeah. Yeah.
Like
definitely.
the valuation is it's pretty hot.
Absolutely.
You know what I mean? How's
Yep.
my sound? Do I have enough gain here?
Oh yeah. You sound great.
Okay, because I just plugged everything back in. I've been traveling back and forth, so I'm very
right on.
exciting update. It's nice to hear, but you know who I want to hear from?
I know who you want to hear from.
Yeah.
The man.
The man.
The mighty man. Can we call him mighty man? The mighty man. Guys, we have an awesome interview lined up for today. We have Brian Valania of ticker MITI. I don't want to waste any time. Let's just bring him in. Let's do it. Sir, welcome to the BFC. This is your maiden voyage. Welcome.
Gentlemen, thanks for having me. I appreciate it. How are you doing?
Doing
Very
great.
good.
Welcome. Excited that you're here.
Great being here. Thanks for carving out some time for me. And I appreciate your viewers as well.
Awesome. Well, let's get right into it. I have a bunch of questions for you. And guys, we're here to do live due diligence. So if you have questions, throw them in the chat. All right. So I just want to go for this here. On August 10th, you announced that Mitesco was ceasing further Series A preferred redemptions because the structure was not delivering the benefits you expected and may have been hurting retail shareholders. Should investors view the dilution issue as solved, or is it more accurate to say it has been paused while you negotiate a better structure? What would a successful restructuring look like for common shareholders?
Well, I would describe it as more than a pause, but not yet a completed solution. We stopped the old redemption mechanism because it was putting pressure on the common stock without giving the company the balance sheet benefit we expected. A successful restructuring would remove that pressure, avoid a dilutive event for common shareholders, and treat our institutional holders fairly. Today, we have roughly 48 to 49 million shares outstanding, with about 10 million in the float. Most of the recently issued shares are restricted and held by insiders or the future management team. So we've also eliminated virtually all options and warrants. So our broader goal is a cleaner capital structure including addressing roughly 3 million of legacy obligations and about 1.5 billion of bridge notes. We are working cooperatively with the institutional holders in protecting our more than 5,000 retail shareholders is central to the outcome.
Yeah.
You have said you want a new Series A approach in place by September 30th. What
Right.
alternatives are currently being discussed with the 5 institutional holders? And if no agreement, and I have to ask this, if no agreement is reached by September 30th, could the old redemption mechanism return?
Yeah, I mean, we're evaluating several alternatives, including a non-convertible perpetual preferred, a term preferred, or another class perhaps of non-trade equity. The key objective is to replace an instrument that is treated as a liability because of its mandatory redemption feature with a structure that strengthens the balance sheet and does not pressure the common stock. As I mentioned, we have a strong relationship with the 5 institutional holders. They're cooperative, and the consent needed to restructure the instrument is there. Our target does remain September 30th. I do not expect the old mechanism simply to return. The board stopped it because it was not producing the intended result, right? So the final structure is still being determined, but our guiding principles are clear. No unnecessary dilution, fair treatment of the holders, and a healthier balance sheet for the company.
Right on. And that's,
Yep.
shareholders, that's something shareholders want to hear. And I like the clarity on that. Very good. Very good. I want to ask you, on June 30th, you announced access to as much as 30 million through an equity line of credit, generally priced at a 10% discount to market. How do you intend to use that facility without simply replacing one source of dilution with another? Would you be reluctant to draw heavily at today's valuation unless it was tied to something transformative, perhaps?
Yeah, I mean, the equity line is a strategic resource and not something we intend to draw simply because it's available. At today's valuation, issuing stock through the facility would not be attractive to us or fair to the shareholders. We would consider using it when the share price better reflects the company's value or when a truly accretive acquisition or growth opportunity clearly justifies the capital. The facility gives us flexibility, however, in negotiating leverage, quite frankly, particularly because growth stage acquisition targets often need capital. But we have other interests from investors who understand data centers and AI software. So we do not expect to rely on the equity line in the near term. I'd say with fewer than 30 million shares held by non-insiders in a tight float, we remain very sensitive to dilution. So having access to capital is valuable. Using it intelligently is really what matters.
So you don't want to dilute this thing to high hell and let it crash and burn, is what you're saying. And I like that. Exactly. And a really fascinating part of the business is the robo-agent thing. And I want to ask about that, and I have some questions for that. You have specifically said, robo-agent is not about replacing agents. It's about empowering them. What does robo-agent do that improves an agent's productivity without replacing the human relationship between realtor and client? Is the idea to let AI handle organization, prioritization, and repetitive workflow so the agent can spend more time selling, negotiating, and building relationships? What can you tell us about this? And for people that haven't even heard of it.
Yeah, exactly. A robo-agent is designed to function like a day-to-day sales manager sitting on the agent's shoulder. It helps an agent set an income goal, translates that goal into required activity, prioritize leads, schedule follow-ups, keeps calls, etc. So it will initially integrate with systems such as Follow Up Boss and later with other CRMs. But the real value is bringing the workflow together in one place. It can also help agents identify and qualify prospects and provide timely sales coaching when they encounter an obstacle. So the AI handles organization, reminders, analysis, and that repetitive work. The agent remains responsible for judgment, negotiation, trust, and the client relationship, right? In a market where commissions are compressing, the goal with Robo is to help agents complete more transactions without sacrificing the human element that makes a good agent valuable.
You know, my wife, she used to be in real estate and was working in that, and the amount of documents she was dealing with, you know, purchase and sale agreements, listing agreements, like lead-based paint disclosures, all these, you know, inspections, rental applications. I mean, it's insanity. Can the robo agent prepare and populate this paperwork, or is it just like reminding them to do this paperwork?
Yeah, that's a real good question. So we're not going to try to replace the established transaction management and legal document systems brokerages already used. Those systems, and as you just indicated, they perform an important function, and entering into that business, quite frankly, would add unnecessary legal complexity outside our core expertise. So our role is to connect with those platforms, right? Robo Agent can organize the process, remind the agent what is due, track completion, and pass CRM or transaction data into that brokerage's chosen back office system. So documents, as you mentioned, can be pre-populated when appropriate. So the agent in the brokerage would still review, approve, and execute documents under their existing procedures. We don't want to get involved in that. But because we are targeting a small number of large enterprise brokerage, the specific integrations each brokerage requires instead of trying to replace tools that already work.
Right. Okay. So you still need the human to look at it, but it can do a lot of the legwork at least.
Yes, indeed.
That's awesome.
There are going to be hundreds of companies putting AI into real estate software. What is actually different or difficult to replicate about Robo Agent is the workflows, integrations, accumulated data, Brian Moses' coaching content, enterprise relationships. Is it going to be a combination of all those? And why would a brokerage pay for a Robo Agent instead of simply giving every agent access to a general purpose AI platform?
Yeah, hundreds is probably an understatement, right? But
well, why so significant for Robo Agents?
Yeah, the moat is the combination of workflow, enterprise integration, data, embedded coaching, and industry relationships. So a general AI platform can draft an email or answer a question, but it does not know an agent's income goal. It doesn't know the required daily activity or stage of each transaction, or the brokerage procedures that we just talked about, or whether an agent is getting stuck. So Robo Agent brings those elements together. It monitors the agent's progress against goals, coordinates follow-ups and scheduling, and delivers short, situation-specific coaching at the moment it's needed. So we're working with experienced sales trainers, including Brian Moses, who is one of the best in the industry. So the guidance is grounded in real sales technology, not generic AI output. So over time, the integrations and the transaction data make the platform increasingly useful. So again, brokerages are not paying for just another chat book. They're paying for a system designed to increase productivity, transactions, and ultimately brokerage profitability.
I'll tell you, like, I did real estate for 2 years. No longer did I renew my license. And I think part of the reason why was because I didn't have, I have the ability to network. I consider myself a people person. And like you said, that's what real estate is, building those relationships, building your network, and having those interpersonal relationships. And I think this is almost sounds to me like as this grows, it's like it's not just a secretary, but an organizer, like someone that you could rely on through the whole transaction process from beginning to end.
Well, we think the biggest problem is task management, and you hit it on the head. That's what we're trying to solve for here.
Amazing. I want to talk about, well, there we are. My mouse was frozen, about your July 28th release.
Okay.
That said, the project has been strongly influenced by executives at one of the largest publicly held brokerages employing more than 84,000 agents. And that robo agent is intended primarily for major industry players. Without identifying anyone you cannot identify, how far have those conversations moved from product testing toward an actual enterprise licensing agreement? When you say first licensing is targeted for Q4 of this year, should investors expect a paid pilot, master license, recognized revenue, or something else? This is a juicy question. I got to pick your brain on this.
Yeah, it's an important question, and we've come a long way. We really have. Our target is to have the first production version available in Q4. We spent roughly a year developing the prototype and are testing it with agents from several major brands. The rollout will begin with a control group rather than tens of thousands of users on day one, right? So allowing us and the brokerage to validate adoption, support, and results before expanding. So the commercial model is enterprise licensing. We expect the brokerage to provide the first level internal support and retain approximately 20% of the fees for billing and support. We are also considering incentives tied to completed transactions so Robo can become a profit center rather than simply just another technology expense, right? So investors should initially expect a paid phased deployment that could expand under enterprise relationship, not an immediate rollout to every agent. So the objective is recognized revenue in Q4, followed by measurable expansion based on performance.
So just to wrap my head around it a bit, so you'll install, like let's say a roughly $10,000 TCDC unit in someone's garage, and then you'll pay that homeowner, $100 a month, and then monetize the computing capacity that's created by it. Who's actually paying Mitesco for that compute? Is it, AI companies or government or enterprise? Like, where does that, I think it's $2,000 to $5,000 per unit revenue. Like, where does it actually come from?
So I'll take a step back. The TCDC is a small format residential data center. So, I'll speak to that a little bit more. So the customers would be organizations that need general purpose AI or enterprise computing capacity. So software companies, managed service clients, wholesale compute resellers, et cetera, government, telecommunications, or even utility partners. So we also have captive demand from our own applications, such as RoboAgent, which gives us a base workload as the network develops. So the model uses small format data center hub connected to distribute TCDC nodes in homes, hotels, offices, even hospitals, public housing, and even rural locations, really. So by spreading lower power processors across those sites, we believe we can reduce the concentration of heat, power, and real estate costs found in a traditional facility. So the projected revenue would come from each selling processing capacity or application services running on each node. So the host receives roughly $100 per month, while Mitesco monetizes the remaining capacities. The exact revenue and margin assumptions, we'll validate that through prototypes in real customer workloads.
Now I'm thinking, maybe I'll put 50 in my house. You know what I mean? Like, I'll just put 50 of the boxes in my house. What do you think about this idea? Because this sounds like a great deal, right? I just get 50 in it.
It's a room just packed.
Just wall to wall. I might need a nuclear reactor to power it. Yeah.
Well, I think it's smart because we're talking about, you hear people complaining about the data centers and the power draw and all that stuff.
Exactly.
So this is really a sustainable option. And you have talked about scaling up to 10,000 of these deployable units. So, what does the path look like from the prototype to 100 to 1,000 and then eventually 10,000? And do you secure compute customers first and deploy against demand, or do you build a network and then sell the capacity? How are you gonna do it?
Yeah, so we intend to scale against demonstrated demand, not deploy 10,000 units and hope customers appear.
Yeah.
The plan is to place a small number of units in September, test and balance them through Q4, and then begin broader deployment in 2027. Each stage, whether it be 100, 1,000, and eventually 10,000 units, should be supported by utilization, economics, and customer commitments. Because I'd say the initial units may cost about 10,000 each, we're exploring, equipment financing secured by the hardware, potentially with a fixed return and maybe some revenue participation. So that would allow the network to grow without creating unnecessary dilution at the parent company level. We already have potential demand from our own application, as I mentioned, and outside parties. So we may also work with wholesale AI resellers or utilities, as I mentioned, telecom companies, or nationwide enterprise customers. So the model is modular, so we could add capacity as contracts and utilization justify it.
Great. I like how you addressed dilution in that answer as well, too, which is excellent. And by the way, we have some great questions in the comment section. Keep them coming, because at the end of our segment, I'm going to just pop a bunch of questions and rapid fire on you and see if you can answer. You can answer what you can, what you can't, you can't. Totally understand. I want to talk about your August 18th release. You said that AI economics increasingly come down to power consumption, utilization, and ultimately the cost of producing an AI result, and that TCDC could potentially reduce the kilowatt hours required per token. And by the way, it's not crypto token. It's a unit.
Right.
But it's not related to anything crypto related. Just a heads up. Do your due diligence on that, folks. But how significant do you believe that efficiency advantage could be when prototypes begin operating? Will you be able to provide investors with real world metrics comparing the cost per token or compute efficiency of the TCDC against traditional centralized infrastructure? I know that's a loaded question, and can you answer that the best you can?
And the answer is yes. So the prototype will allow us to publish real world operating metrics rather than rely on projections. So we plan to measure power consumption, processing capacity, utilization, revenue per available node, and gross margin, and compare those results with traditional centralized infrastructure where possible. So we believe the advantage could be significant because the model uses low power, off-the-shelf processors, existing power locations, and a distributed hub and spoke network. Instead of concentrating heat and electrical demand under one expensive roof, the workload is distributed across cost sites. So, we believe that could create substantial margin advantage, potentially many times greater for appropriate workloads. But the test bed must prove it, right? So by the end of Q4, we expect to understand the economics much better. The important part is that the model is measurable, scalable, and based on components that can be repurposed as processing needs change.
And in today's press release, you talk about how you want to bring this to being a residential micro data center. You specifically discuss potential integration with smart electrical panels, battery storage, HVAC, EV charging, energy management, and home automation. How far do you ultimately envision this going? And could TCDC, I always want to say ACDC, by the way.
Yeah,
could TCDC, hey, this thing rocks, right? Essentially become the local AI brain or gateway for a connected home, managing energy and connected devices while simultaneously providing outside computing capacity. I mean, is this going to be a one-all?
Right. Well, that's the long-term vision, right? So phase one is to place computing capacity in locations such as homes, garages, hotels, offices, and other unused spaces and operate those resources as part of our network. So once the equipment is installed, it can also become a local platform, as you suggested, for services that host uses directly. So over time, that TCDC could serve as the gateway for smart electrical panels, battery storage, HVAC, EV charging, security, you name it, right? And other connected home applications. So the homeowner would not necessarily need new hardware for every service. Many of the features could be delivered through software, much like adding apps to a phone. Our real estate relationships could help us reach homeowners, while potential service company relationships could support installation and maintenance. So we want to establish the computing backbone first, then add useful home automation capabilities as the market and partnerships develop.
And I will say real quick that, I've had debates with people about the AI, and people are like, AI sucks and blah, blah, blah. The truth of the matter is this, is that if you think this is going away, it's absolutely not. It's not going anywhere, and it's going to be integrated into our everyday life. And I think this is a prime example of how it's going to affect everybody. And just look at how we're adding smart meters, for energy conservation. I mean, you're going to be at work and you're going to have the management of your whole entire house on your phone. And that's just the truth. And guess what? If you think these programs aren't going to make decisions for your house while you're not there to turn down the heat, I mean, I honestly think that's where this is going. And so, crazy stuff. That's just my opinion, though. Not the opinion of the company, but that's where I'm at on it.
It's a good thought.
Well, and you were talking about partnerships, and you've even said that the company's begun exploring strategic partnerships with established participants in residential energy and infrastructure and automation. How far along are you with those discussions? Are you talking about early conversations, or are we down the line with something being papered?
Yeah, the answer, the conversations are at different stages, right? So we've been speaking with home builders through our real estate channel for several months. And that same network gives us access to regional developers and contractors. We're also evaluating acquisition and strategic opportunities, as you alluded to, involving home services, automation, and software. So our initial TCDC design is really intended to be an appliance like Place It. We're talking, you're kidding around with 50, but appliance like Place It, plug it in, and connect it securely without requiring a specific electrical panel or extensive rewiring. So that makes the model relevant to existing homes in commercial locations as well as new construction. So, we think over time, the opportunity could include home builders, utilities, telecom companies, municipalities, et cetera. So I don't want to overstate where any individual discussion stands, but I will say these are active conversations, and we are evaluating partnership, financing, installation, connectivity, and pilot structures that could absolutely accelerate deployment.
Excellent.
Love it.
I want to talk about the article published by Mike Sheik. I've known Mike for many years, read his stuff, and he highlighted your June 30 comments describing one acquisition prospect as a unique materials processing technology supporting power distribution, integrated circuits, and circuit board manufacturing. He then connected that language with publicly available information. See, I'm covering my ass here, folks. Involving advanced materials companies in the broader AI data center supply chain. So without commenting on any specific acquisition target or confirming speculation, can you help investors understand what kind of technology you are actually looking for? Why does... tell us about this if you can.
So I can say this. We are interested in technologies that address critical bottlenecks in the data center, in electronic supply chain power distribution, advanced materials, and integrated circuit boards, and related infrastructure, right? So material processing belongs in the strategy because computing capacity depends on more than servers, right? It also depends on components and materials that make efficient power delivery in electronics possible. So, we don't want to comment on specific acquisition targets or market speculation before a definitive agreement. What I can say is that we have spent significant time evaluating opportunities in this area, and additional prospects continue to come to us, quite frankly, through our institutional relationships. So any transaction must be strategically aligned, capital efficient, and capable of contributing to the company relatively quickly. So we are not looking, we are not looking to collect unrelated businesses right now. We're looking for technologies and teams that strengthen the infrastructure required to build, power, and operate our data center platform.
I know we're not about speculating, right? But I read another article.
There it is, a speculation right there.
For my sake, and it had publicly available information connecting Mercer, Chemex, Illuminous, and your acquisition language. I want to say I'm reading it as speculation, but are you able to? You're not able to necessarily address any specific company, but with regard to the broader thesis, are we in the ballpark there?
Well, the broader thesis is correct, right? So we are interested in technologies that solve infrastructure constraints around power, advanced materials, and the broader AI data center supply chain. So those constraints are becoming more important as computing demand grows. So regarding any specific company, we have said what we can publicly say. We have performed, as I mentioned, we have performed months of due diligence on certain opportunities, including professional evaluations and market planning. But we do not have a definitive agreement to announce today. We prefer to announce any transactions when we have confidence that they can close, rather than create expectations around a non-binding letter of intent or something like that. But we also have other opportunities that may move more quickly. So our standard is straightforward. The business must fit strategically, be financeable, have a disciplined management culture, and create value for both sets of shareholders.
You stop the old series, the redemption. All right, that's great. You got access to significant fundraising. You got Robo Agent approaching commercialization. TCDC is rocking. You could say that the idea is coming together. But as things unfold, if we bring you back at the end of 2026, all right, what specific milestones should shareholders expect that you have actually delivered on?
By year end, investors should judge us on execution. The milestones are a completed Series A restructuring that reduces the pressure on the common stock, removal or resolution of significant legacy obligations, a production-ready robo agent with an initial paid enterprise deployment, operating TCDC prototype with published power, utilization, and economic data, a clear financing and deployment plan for scaling the network, and addition of management talent needed to execute all this. So, we also expect to make meaningful progress on acquisitions. We just talked about it a little bit, but we'll only announce, as I mentioned, a transaction when it's real and capable of closing. I would say this: for nearly 3 years, we have rebuilt the company on very limited capital and kept overhead extremely lean. The next phase, is to invest selectively behind the business we've developed and produce measurable operating results. I think that is what changes the perception of Mitesco, right? From a turnaround story to an operating technology company, and we're excited about it.
That's excellent. I do want to throw up a couple comments here, and
sure.
We had Richard Smith Interesting way to tackle data center power and heat issues. Spread out the processors instead of concentrating them in one spot, which is great. And he followed up with a couple of questions. Who are the real estate companies testing the robo agent software? How much per user? Estimated users in, say, 12 months? So could you, and he does have one more, but I'll let you answer any of that stuff first, which you actually talked about. But
so we're utilizing a number of brands, and I would also say that the folks that are testing, from EXP to Caldwell, et cetera. But I'll say the folks, the agents that are testing are various skill levels as well, from folks who are seasoned experts to those who are green, right? So we really are capturing a lot of feedback from various skill levels as well as various brokerages.
And he does follow up with, a recent press said they were going to start using Apple processors in the edge nodes, TCDC boxes. Why Apple?
Yeah, I mean, I would say Apple, from a technology standpoint, Apple gives us the best option from that, and from a cost perspective as well.
Oh, awesome. And he really blew up the chat. How many agents are there today? What is the size of the market? So if you want to address
from a standpoint, from real estate standpoint, there's 3 million agents in the United States today. So we believe there's a huge market out there, and why we're absolutely excited about it,
huge potential.
Yeah. So for Robo Agent, and when we talk about Robo Agent, for Richard, we are as we look very forward thinking, looking to expand that outside of real estate as well, into some financial sectors as well.
Yeah, and I think guys. This is and I hope this is like, not cataloged, but I can't think of the word, but I hope people look back in like 5 years and we're like, oh, E-Rock was right, because I'm telling you, this is in its infancy. We are just getting started, and this is going to be everywhere. I do have another question. I have a question from Kevin. How are the companies, and cheers, Kevin. How are the companies working together? Is this compounding revenue, or is this just companies linked with shared technology?
Yeah, I mean, it's companies linked with shared technology. This technology exists, right? And so we're not inventing anything. We're utilizing what's out there. That's allowing us to keep our costs down, and that's been the formula.
Awesome, great job, Kevin.
Yeah, thanks for the question.
Yeah, absolutely. And J-Rab has a question. Cheers to you, J-Rab. Good to see you as well. Will nodes benefit from being clustered in central locations, like having a home community all be adopters?
Yes.
That's excellent. Wow. I love the questions, by the way. Guys, remember, that's why we're here.
Thanks for everybody's paid great attention. That's great questions.
No, absolutely. So anything else you want to share with shareholders or potential shareholders? The floor is yours.
No, we are very, very excited. We covered a lot today, and I'm grateful for you guys giving me the forum to do this. Stay tuned for great things ahead, without question. So it's an exciting time, and we look forward to closing the year strong.
Beauty. Awesome. Guys,
great
Brian,
business. It's so exciting that the idea of the data centers just being decentralized and low power, and you know what I mean, instead of just taking up a giant field and sucking up all the resources. It's just brilliant.
We think it's smart. We think that's where the industry's going, and we want to stay ahead of it.
It's great. And Robo Agent's going to be next level too. So
yeah,
I mean,
for sure.
With that working in tandem simultaneously, it's freaking awesome. Brian Valania, Mitesco, OTCQB, MITI, and I have a feeling this stock is going to be mighty strong in the coming months. Great job.
Gentlemen, thanks again for your time. It's been my pleasure.
Thank you.
Take care.
Definitely one to keep on the radar for sure. A lot of
and it's thin down here, baby. Woo, it's thin right now.
You gotta pull it?
No, at mercy.
Pull a chart. Pull a chart. Now he's out of here.
Come on now.
We can talk the chart. Let's do it.
Come on now.
Come on now. It's gonna be mighty. It's gonna be mighty fun.
Lord mercy.
Mighty strong. Stock Guru.
There you go.
Yeah. And it's so funny because last show, remember, we just added it and Mike was telling me about this, and he goes, could you cover this one? Can you take a quick look? And so I'm like, all right, quick due diligence. And the more I looked into this one, I really like where it's going. I like what we see here, what they have going. I think the real estate agent, the robo agent thing is really kick ass. And I think the whole thing with TCDC is going to be very, very smooth.
TCDC is just so smart. Like you think about all the amount of money that they're putting into data centers, and big dip here. I mean, if they get these redemptions wrapped up, I mean, the you know, I mean, because if you look like, because right away, it's like, okay, what's going on here, you know? But if you actually look at it from like a share structure, because it's all relative, right? Like you're looking at this and you're going, oh boy, it's really getting sold off, right? But it's all relative. Like this looks like a lot of selling until you hover over it and see it's only 300,000 shares. You know what I'm saying? So like, you know, and even this 400,000 shares, you know, so like a 3 milli day, a 4 milli day, a 5 milli day, you know, and this will look like a pittance of volume, right? You know what I mean?
Ridiculous.
Like it'll these will shrink to nothing. And you could see it here on the DTC. I mean, it's just phenomenal. 16 million's crazy, bro.
Now, actually, and now I know some of you guys are going to ask. There were 3.5 million added, but if you actually scroll down and look at the volume, there was a day where those shares were just dumped. So I don't think there's anything holding this one back. Even like when there were those 600,000 shares added, those shares were just dumped. I think they're out, they're done. But when you're talking like, and guess what? CVAT, didn't they just have a 3 million day, 4 million day or whatever yesterday with that news? And I believe it did. So if you look at like MITI, if they have something like that with their shares, and their share structure is much tighter than CVAT's, look out. This thing could go freaking bonkers. So it's under what? Like I said, under 17 million at the DTC. They're tightening things up. They have it. They want to get it in place by the end of September, which gives them plenty of time. They have 6 weeks to wrap this thing up. Friggin' A. Now look at CVAT. Let's take a look at this one. This bad boy's been, you know what? There was some selling, obviously, but like you had 3 million shares trading. You have the buyout en route. And I think there's a lot of people that want to, you know, they're going to trade it. You're not going to see CVAT run to 20 cents. Because
at least in the short term, like you could see they didn't, like it made that big move and they have not nuked it back down.
No, they haven't. But they also know, traders know too, why would we run this thing up and buy the hell out of it past the value of what it's actually worth? And so,
right. So when he did those numbers, I mean, like, you know, there's still a lot of upside here. A lot.
Yeah. So what else do you want to? Because I have one other one I'm going to talk about today. And where's Tweetvestor? Where the hell is Tweetvestor? Where is Tweetvestor? Son of a bitch.
Well, it's not his fault. I mean, he came on for the stream, and you know, we gave him the time to where it started, but he didn't really realize that it would be, you know, like later in the stream. So so like he'll be back for maybe a future one, but he had a hard stop and had to rock and roll. So, you know, sorry, it's a bummer we didn't get him because he's a really interesting guy, but it's not like hard feelings or anything like that. Like he didn't realize, he thought it'd be like right at 4. And then, you know what I mean? And so schedule wise, we're just working it out. So we're doing rain check for Tweetvestor.
I got a fire round for him. I got a juicy fire round ready for him, by the way. I do.
Yeah.
If you look at his X account, it's very entertaining.
Yeah. So it's not like he was like, you guys suck, you know, like, and I've heard that.
Oh yeah.
But let me go through a few. I'll do a run through of just a few things that I'm looking at, and then we'll hear yours. So there's a few things going on. First and foremost, the SKFG merger, you know, which people is just going bonkers now. 150, and I said in the chat yesterday at 7, even at 75, I said, you know, it'll be $1 probably today or tomorrow, and here we are at 150. The DD with regard to the Shaz relationship is just unbelievable. Like, I mean, you know, look up the ticker. And like, it's just bonkers. So SKFG really proving the point, you know, that these reverse mergers are so key.
Mm.
And I mean, it's just going gangbusters. Another reverse merger on St. Joe, and
oh yeah, this is a good one. This is a beauty.
This fast space deal, and it was announced, kind of Friday. Made a great move, kind of 02 to 05, and then just went hammer time yesterday to almost 13 cents, from 02 to 13 cents, and sold off a little bit. But you know what else sold off a little bit after the first move was this. That's what people forget. There was a period of time there where, this went from 10 to SKFG 10 to 90, and then back down to 20. And, people are going, oh, this ain't nothing. You know what I mean? But and then now it's at $1.50. You know what I mean? So, an initial sell-off there, and could have been some old holders because there was some static there from back kind of just after COVID. It was like a big alert, if you recall, from a well-known YouTuber that used to do OTC. It was a big alert. And now they are merging in this fast-paced asset, which is an excellent asset. They have tons of customers, Fortune 500 customers. Their new AI-powered product is being powered by NVIDIA processors. They're going to merge into the STJO shell, and you will see name change coming, so much coming. DTC only 15 million. So I would hang on to your booty shorts there, because this one is a stunner.
Well, you look at
another very interesting story. Silvergate Capital. If you don't remember Silvergate Capital, do you remember this?
I don't.
This was the bank that failed.
Okay. All right. You told me about this one.
Signature Bank and Silvergate Capital. This bank failed 2023. It was one of the bank failures, down from $240 a share down to 80. Well, it was down to about 50 cents. And today it went off the gray market to pink yield. And they went through a bankruptcy proceeding. They were going to cancel common stock. And then an activist investor came in, petitioned the courts, saved common stock, and has intention of what they intend to do with this shell.
Wow.
So this is like big news. Like, this is a big deal. And, people will say, hey, this chart has room. You heard this one? Hey, this has room. Right? And like, listen, I don't know how you measure room, but holy shit, this has some room. So what he intends to do with the asset, they have a lot of assets in terms of like tax credits and different things like that in there. But a company, pulling itself out of bankruptcy, saving common stock, and especially a news maker like this, it's a big deal. And if you recall, SBNY, which is Signature Bank of New York, back in 2024, came off the floor, and it did 10,000%. So I'm not saying Silvergate Capital did 10,000%, but to put it is going to do 10,000%, because I'm not trying to go to jail. But I will say this, to put it in perspective for you, I'm not trying to go to jail, my friend. You understand that?
No, not at all.
Maybe I want to go to jail. You know what? I was thinking about jail. Maybe it'd be a break.
Cheaper? A break from reality, man.
Yeah, you know what? Like, I'm hanging out. I'm getting some rest. My meals are sorted. I'm not worrying about bills.
You don't have to worry about nothing.
I'm not worried about bills. People say, hey, you pay your bills? No.
I'm in jail.
Anyways, what am I doing here? Yes. Look at this. So for all the chatter about SKFG, which is awesome, by the way, Signature or Silvergate Capital had about equivalent dollar volume today at 212,000.
Wow.
So,
and you know what? A lot of people think like you have, and a lot of the OTC. What do they look for? They look for the trips, and the people that like low floats like they like their dub fives and they like their pennies. And so like people aren't looking at like they're not chomping at the bit for an 80-cent stock. But if you look at the historical references that you're making, if you look at the saving of that stock, the common stock, I think there may be some motives here that people are finding on the back end on why to do that. So
yeah, and I ultimately gauge interest by how much money went into something.
Mm-hmm.
You know, and I'm not finding any trips or dubs that pulled 200 G's today.
Nope.
You know what I mean? So someone's ponying up the cash. They're putting their money where their mouth is, and these two are heavy on the dollar volume in this space. So certainly one to watch. Other ones I saw the Bubbler making a bounce, which is an excellent setup, and really the type of setup that could do, you know, a dub 15 could do the type of move that, you know, we saw with Onar and others. You know, it's getting a little thicker now, but 137 million at dub 15 ain't bad. I'm not exactly sure what's going on with them right now, but there is some DD floating around. And the other one is Blue Star Foods Corp, which is a trip 7 at 160 mil DTC. But more than that, the AS is only 500 million. So, you know, you might be getting to a point where this is just too thin to live. You know what I mean? Like it's too thin to even exist. So those are two to watch. This MVNC is a nightmare. It's like, look at this. I watch it all the time. It's so thin, but I don't know what the hell to do with that.
Can I just say something? Like when people say, and I don't give a shit, I'm going to say it. When people, I mentioned BDGR, and I see those huge volume days where we had almost 1 billion in volume. And listen, people don't load and then the next day it runs. People load slow. You could have, and there were a couple tickers that this has happened to where like weeks go by or a month or two goes by, and then they got their news, they got reverse mergers, they got their IR guys coming out of the woodwork. And guess what happened? I could use this as an example when you have something like that.
Yep.
That's why I throw a gamble on things like RE or BDGR, because when I notice those high volume days and people loading up, I'm like, eventually they're going to run the shit out of it. And I'd rather be on the receiving end than having, you know, than chasing. I'd rather be selling the cheer than chasing. That's it. Go ahead. Sorry.
Yeah. No, please. I hear you.
Go back. Go DNDT. You called this one. This will hit your radar back. What was it? 40 cents, 50 cents or whatever. And now look at this baby.
So 30 cents. And, you know,
wow.
And now I'm looking at this. Look at this. I'm just looking at, like, it looks like the same damn thing. Look at this today.
Yeah.
It looks, RPDL looks like the same damn thing again. Yeah, that's, yep. I'm going to have to do some digging on that one, because I don't know what the hell's going on here, but there's, good golly. And look at this, look at this loading today. 90K in. Going to be one to watch. So, but for me, you know, SKFG is proof that, and then this, and iHigh. They had great news out today. They're becoming Premier G. And I've been saying like all week last week, like, you know, it's at this support, you know, 09, 10. And then, you know, the Premier G deal, they got the SOS change, they got the website coming, and then a really nice rip off the support. And now kind of building a flag there. So I wouldn't count it out for more, because these guys have just like crazy patents. And there's just so much going on with these guys that, you know, it's at some point it's going to get bonkers. So keep an eye on that. And that's what I got.
Wow. Unbelievable.
Lots going on. There's lots going on. People will be like, it's so slow.
No,
listen, there's lots going. It's slow if you algorithmically, it's slow. Like when you're on Twitter and people are talking about things and they get no likes or views or anything. Like I understand that. But if you actually look at like the dollar volume figures that are coming in, they're not bad. It's just a lonelier game now. You know what I mean? Like that's really what it is.
I think there is a lot that's going to happen in regards to. I think the setup is there right now.
Yeah.
I think this is. I'm not going to say the calm before the storm. I'm not going to do that. I really am not. But I'm actually going to pull up a couple charts.
Here's my
I think we're noticing things where, and you got to look for dollar volume. When you see chunks of dollar volume coming into these stocks, whether they're in the trips, whether they're 84 cents or whatever, it's an indicator and where the big money is coming. All right. That's my opinion.
Yeah. And, you know, a lot of them have like $100 in or whatever. But if you see something with 20, 30 grand in out of nowhere, you got to pay attention. But, you know, the final, like my thesis is this, like every asset class is so overpriced now. It's absolute bullshit. Like houses, stocks, metals, you know, I mean, like anything you want to get, like try and buy a set of tires right now. It's bullshit. Everything sucks cost wise. Okay. Like even eating sucks. That's why I don't even do eating anymore. I lost 70 pounds because I'm just done eating. I'm sick of this bullshit.
That's bullshit.
Tired of it. But listen to this. The only thing left that is not an asset class that is at absolute saturation point is this OTC.
Damn
and at
right.
some point, this printed fake ass money that we're all flooded with. I'm not, but someone's got some printed fake ass money somewhere.
Oh,
it's
yeah.
gonna find its way to an asset, and these are it, man.
In just the last 10 years, I laugh about like, and speaking of real estate, and you mentioned it, but the fact my house is worth almost $250,000 is laughable because it's like, we didn't pay that for sure. When you have a $94,000 house that like triples in value, people can't even sell their homes now. I know people that can't even sell their homes, and people that definitely aren't buying. If you're a smart buyer, you're not buying a house now. Why would you buy it to an inflated market? It's so and it happened in Canada before it happened here. And I said it. I told people, I go, do you remember you have a 1-bedroom apartment or a house or whatever going for $100,000 back in the day? Even and then it got to a point where it's $200,000. Like your housing costs in Canada went through the roof, and everybody's like, "Oh, we're fine. It's America." Guess what? I said it was going to happen here, and it did. It happened, and it's ugly. And it's not; those prices are never going to retrace back to the values they were in 2008, 2010. Not going to happen.
No, this is what I'm saying with assets and asset bases. Like we're, you know, like these OTCs, this is it, man. Like there's a lot there. There's a lot to look at. And you know, I get it. You don't, you know, it's slow sometimes, it's spready sometimes. I get it. But you know, like be real. Are you really interested in buying, you know, some of these big board stocks at like $1,000 per share when the whole market is just an insider traded scam? Like, Come on back down.
Come on down.
Come on back down.
Oh my God, it's like Hades Town.
Now I've got a hard stop in 10.
Yeah.
I know you do too. So let's see your stuff.
Yeah, I'm supposed to be at a concert in an hour, which is pretty funny. And I was going to cover DRCR. That's another low float that I think, you know, once that thing gets legs, it could really move. Great share structure there. But I want to talk real quick about Hollywell. Listen, guys, we covered this one. This one has been, this has ran multiple times since we started covering it when it was a penny. It's been up to 24 cents, back down to 4, up to 20 cents. But now it's different. And this is why I say it's different, is because there's substantial news going alongside of what we're seeing. They just had a catalog of the Melody Trust, a wholly owned subsidiary of Hollywell, a catalog valued at $480 million. And it's not bullshit. It's actually an independent valuation was done. But look at the chart. And I had this marked because I started picking up the 12s, and then we broke the support there. But here it is right again, right back in that, I call it a nice juicy buy zone right here, because this is a completely undervalued company. And they did just put out news today, and I want to share that and leave you guys with this a little bit. Let me see if I can find this. And this is a good one too. I missed my slideshow. I need to just do that. Okay. This was something they put out today. By the way, they closed at 15, so good news there. Momentum Media Fund and Lunar Records Fund to provide investor relations coverage and support for the Hampton Global Passion Project's Legacy series. So An invitation-only series of private gatherings curated for top Hampton family wealth, hedge funds principals, philanthropists, and sophisticated investors. Momentum Media Fund invested a major stake in in its media venture Momentum Studios, whose credits include placement of its client stories and positioning to investor audiences in networks like NASDAQ TV, New York Stock Exchange TV, Bloomberg TV, Fox News, Forbes, and hundreds of media outlets in finance, space, AI, technology, and entertainment sports. And by the way, Lunar Records, don't forget, it's a joint venture between Space Blue and Melody and Hollywell. So that is, you're going to want to keep an eye on this. So there's the actual invite. They're going to see what we come up with. And if you think that big money like this isn't going to trickle in to this stock, I think that they're doing everything right, and they've laid it out on the show. I'm really excited. I've been pounding the table on this. I've been buying the hell out of the stock. This isn't me just like pounding the table on it because it's a paid promotion. We did promotional activities. That contract ran out. Now I'm just buying the hell out of the stock. I am, and I'm putting my money where my mouth is on that one because I think the setup is real. This stock has went with the same investment groups to $20 beforehand, and the company was not worth that much. All right, they were doing telecom and all that crap. Right now, the value of the stock should be $3.24 without any industry multiples or anything like that. So I'm going to keep pounding the table on HWAL. That's it. I'm going to keep pounding the table on it, and I think it's going to rip the faces off the OTC. And I'm gonna. No, I'm not gonna say. I'm not gonna say what I was.
Thank me later, IMO.
That's right. Thank me later. Thank me later. That's the conclusion. Oh man. Well, that was a. I need to get that so I can just pop it on here. Boom. Thank me later. That was great.
Thank me later, IMO.
All right. What a show. Kiko, thanks for joining, and keep an eye out on all these stocks. I think we're gonna have a kick-ass fall. That's all I'm gonna say. So
that's it.
All right.
Remember,
guys, there's more that binds us and breaks us. Peace out.